Hello, everyone. Today I'm joined by Lise Birikundavyi. She's the managing partner at BKR Capital, a Toronto-based $20 million VC fund that's built to invest in Black founders in the tech space. How are you doing today, Lise?
I'm well, thank you. Thanks, Tony. Thanks for having me here.
Of course. So let's get right into it. Could you share a little bit about your background and what led you to become a venture capitalist?
Yes. So I grew up in Montreal, and I'm originally from Burundi. Something that always basically bothered me growing up is the disconnect that I was seeing with the image of the Black population on TV and what I was seeing around me in my ecosystem. There's a lot of resilience, a lot of excellence in the Black community. A lot of people are achieving great things, but it was not represented. And I always felt strongly about being part of that change. Growing up, I started my career in finance. I was in the hedge fund space, but I was exposed to a concept of that was called impact investing, investing to change, social issues, to improve society, but also to make money. And this is something that really interested me because of, my background, my personal experience, where I've seen a lot of issues caused by the lack of economic empowerment. So I just felt that there was a lot of issues that could be solved sustainably by having good businesses leading that. And I wanted to be part of that change. I was initially looking at doing that more in emerging markets. So I left my job in the hedge fund space. I decided to move to China. I wanted to have a better understanding of the China-Africa relationships, as well as the Chinese way of doing business, learning Mandarin. And then the whole goal for me was to become an investor for the African continent. The initial mindset that I had was, if you can help build strong Black-led countries by a thriving private sector, then you're changing the narrative for all Black people around the world. Generally, I think that was at the root cause of any issue, and I wanted to be part of that change. So by changing my profile, by becoming more of an impact investor, that I started doing direct investment. So I was involved in funds doing investment in tech on the continent. I lived for 2 years in Ghana, then I moved to Côte d'Ivoire. I was investing in education technology out of Côte d'Ivoire for a Swiss foundation. And every experience that I had on the African continent also just added to the fact that I was meeting a lot of amazing, impressive Black people, right? Doing things that, just leapfrogging, technology generally. And just the mainstream image had nothing to do with reality. And that just powered me even more in terms of, how do we change that? How do I keep on supporting amazing innovators? I came back to Canada end of 2019, beginning of 2020 for personal reasons. I was about to welcome my second son. And then COVID hit, I think 3 weeks after I gave birth. So I was sort of stuck, there was no more traveling happening. And at that time, that's also when the murder of George Floyd happened too. And everybody around me was so hurt, rightfully so. And I realized that I was doing so many things abroad. I still understand why, the root causes of why I wanted to do so many things outside, but that there were also immediate things that I could do, at home. I grew up in Canada. That's where my family is. That's where everybody is. Mm-hmm. I met with Isaac Olowolafe, who's my business partner, and who was also in that same mindset that we need to basically showcase the opportunity that we're seeing within the Black community. We need to invest in Black talent because there's so much potential. So we decided to partner and to raise this venture capital fund. Initially, we wanted to raise a $10 million fund. We were oversubscribed, so we're closer to 20 now. And we're the first Black-led fund in Canada that's managing institutional money in the VC space. And we're really unapologetic about the fact that we're supporting Black-led tech companies because we know, even from an investment perspective, that this is the right thing to do. that when you're seeing so much, talent that is being neglected by the rest of the of the investment community, that there is a lot of performance to go and get this way. So that's the whole story of why we decided to start this fund.
Oh, that's amazing. And you clearly have a global, finance background, and you've lived in and worked in multiple countries around the world. Could you share how that has shaped your worldview on capital and how it's being dispersed?
Yeah, it's been interesting because even when you're investing in places where the population is majority of different origin, where the money comes from has a big impact with respect to where it will be invested. So I was working with a lot of foreign organizations. I can only really speak about the African continent, although I know it's true for other places, but money coming from abroad was really looking to invest in companies that were also led by people coming from abroad. And that led to the same business mistakes being made over and over again, because sometimes there was a bit of a lack of understanding of the surroundings, the area, where you had amazing and talented people that were from that area that did not receive the funding or just very little funding and expected to change the world with that little funding, right? So that's one thing that I've discovered about how capital is distributed. But there's also another aspect that I still need to wrap my head around, is that there's also a lot of capital available in emerging markets that are, owned by people living in emerging markets, that is extremely risk averse, that isn't mainly invested in real estate or invested outside of those markets. So sometimes the environment is not enabling for this capital to stay within and to invest in the next generation of entrepreneurs. So this is something that I'm still trying to figure out and have a better understanding, but there's, and if I'm speaking of just the African continent, there's so much wealth on the African continent that I'm still trying to understand how come this is not reinvested in entrepreneurs.
Interesting. And so right now your fund invests about 90% in Canada and 10% in the rest of the world. You mentioned emerging markets just now. What are some other promising markets that you're interested in, and why?
So right now, to be honest, we are mainly focused on Canada. So 90% is in Canada and 10% is opportunistically outside of the country. And we're doing that because there's a big pool of entrepreneurs in country already that needs to be supported, and it's not just need, that are a good opportunity for us to support. And what is really interesting about the demography of Canada is that most of the Black entrepreneurs, most of them, not everyone, because we also have Black Canadians, but majority would be first and second generation of immigrants, and who are building amazing products and services that will be beneficial for Canada, but also have an eye at where they're from. So they're trying to see how this could be beneficial for both Canada and their country of origin, be it in the Caribbean or in the African region or wherever in the world, right? Which is really, really interesting. So I think that by investing in sometimes in underestimated, resilient founders, you have products that are more innovative and inclusive and that think further sometimes. And that's what we're looking for.
That's interesting. So speaking of what you're looking for, you have some really interesting portfolio companies. Could you speak a little bit about what interests you or what attracts certain companies to you, or what attracts you to certain companies, should I say?
A few things. It's a match on both ends. So we have to see a really good business opportunity, and so we have to have a clear roadmap towards $100 million in terms of revenue at some point. And then, but we also have to have an understanding of how can we help them get there. You have some brilliant entrepreneurs in spaces where we're not necessarily super familiar. So, which means that it's not necessarily for us. We want to be very intentional about how we're helping our founders get to a certain level. But yeah, so we're sector agnostic. We're looking at tech space, but there are a few verticals where we have a bit more familiarity because of our experience. So everything that's prop tech, real estate technology, education technology, financial technology are the core of what we are really looking at and being interested. But obviously, we know that Web3 is becoming bigger and bigger, health technology as well. We're open generally.
And how has the current economic climate affected your investment strategy, if at all?
That's something we're proud of, because it has not really affected our investment strategy, because we're investing in resilient founders who've been able to do so much with less. And we don't expect that to change. I think that what's happening right now in the ecosystem is that the past years, money has been just thrown at founders in general, right? In the VC space, with little due diligence, and valuations have been going up extremely fast without necessarily the right, traction to back it up. And now everything is reverting to the mean. Every startup that did not necessarily have strong fundamentals are feeling it right now. And the ones who did will go back and win. We're supporting companies where we feel the fundamentals are being built. And that, even, with our money, they will be able to go as far as getting out of this crisis without that much of an impact.
Yeah.
The only real difference I would see would be on the conversation around valuation. They were a bit inflated before, not necessarily as much as mainstream, but still. And now we're seeing numbers that are a bit more reasonable.
So does that decrease in valuation in startups mean that most VCs are gonna, I guess, go shopping now? It's like a shopping season?
No, the decrease in valuation is because VCs are less interested. Now most VCs are stopping to invest and are looking at what's happening in the market, or hesitant. So startups are trying to be a bit more attractive by being less expensive.
Interesting. Okay. So
I think what will make VCs invest is people have to really focus on fundamentals in their businesses.
And that kind of leads into my next and final question, which is, if you were a startup founder seeking funding, what would your game plan be? How would you make yourself attractive to an investor?
I think the first thing is to look back at your numbers. How are you growing? What's your plan? How are you growing your margins to? Do you have a real understanding of your customers? Do you have a real hiring? Do you know who else you're bringing on your team, or do you have the right people around you? If you have an A team, if you know how you're getting the customer, if you have a good understanding of your customer, meaning that you're building with their feedback, not because you think that's what they want, because you know that's what they want, and because you know that they have this ability to pay for what you're providing, the stronger your business is, and you're not basically asking money to survive, but to thrive instead, the more appealing you are to an investor. So that's one, just making sure that your business is where it should be at, and then the second thing would be to speak to the right investors as well. Sometimes there's not enough work that is being done at targeting the people who are aligned with your own strategy. When we have a thesis, usually, unless you're a high net worth individual and you're just investing your own money, but when you're an institutional fund, you have a thesis and you're respecting that thesis. So if I'm, for example, on our end, if we're saying that we're investing in Black-led founders, and people who don't identify as Black come and meet with us, they can have the best idea in the world. They're wasting their time, because that is our thesis, right? Same thing if you have a fund that's focused on female founders, it's not about convincing them to do something else. They have their thesis. So I remember when I was working in education technology, I would see some people doing, I don't know, agriculture, coming and talk to me. So just doing your homework, having an understanding of who you're speaking with, also the level of risk that they're willing to take. Some investors consistently, for example, will not invest in certain type of business in terms of stage. They're more risk averse. If it's your first raise, maybe it's not the best investor to go and speak with first. But you're seeing others that are more willing to give first checks. Maybe they are the ones that you should be speaking with first. So it's really about doing your homework. At the same time, it's never bad to accumulate pitches and grow an experience, but you have to understand or have your expectations be at the right level if you're speaking to someone who's not aligned with what you're building.
That's good advice. And Another question that I actually have is the difference between like the VC landscape in Canada and the US. Like I know like both regions are very similar. Are there any like Canada specific issues that you see startups trying to solve versus like, I guess, you know, an issue that's in the US that it may not be an issue here?
I think that even, even within the US, there's a lot of diversity from state to state, region to region. And you'll see that same thing in Canada. So you'll see, in one province, there's more businesses that are of this type. In another province, there's more businesses of this type. So there is diversity. I would say that the big difference, or what I'm seeing that our startups sometimes struggle with, would be market size. And that's why their eyes are often already in the, looking at the US, although they're quite early, because they're thinking, the US is 10 times bigger than what Canada is in terms of, the number of people. So we have more chances of succeeding there. So we're doing a lot of work to try to keep our companies in Canada. So that would be one thing. I think that also because the competition generally is more fierce in the US, valuations, although they were high everywhere, were definitely higher in the US. Ticket sizes are bigger in the US as well. So when you have a US investor coming in Canada and all, the deals you're looking at, their valuation are inflated all of a sudden, So that's the disruption that we're sometimes experiencing. But generally, I think that the markets are just very, very varied, even within each countries.
Interesting. Well, thank you, Lise, for taking the time to chat and share your insights on this space and, share your background also. Best of luck with the fund. Are there any upcoming updates or, future plans for the fund we should know about?
Well, we're about to hit our final close and to close a few additional investments. So, keep watching. We'll have a few announcements in the upcoming weeks.
All right. Congratulations. And
thank you.
Thanks for joining, and you have a great rest of the day.
Thanks, Tony. Thanks for having me.
No problem. My pleasure. Take care.
You too.